Two, one.
Hello, everybody, and welcome to the DASTrader Newsroom. And today's session is on market reactions after the Labor Day weekend. So traditionally, September is a very, very interesting month in the markets. And my name is Michael DeGioia. I am your host, and I'm Director of Educational Services and Licensed Professional here with DASTrader. And let's jump right in. And we're going to talk a little bit about the September effect. So hello, September. September is statistically the worst month of the entire year from a percentage basis. Now, remember that that is including the last 20 or so years that most market declines occur in the month of September. And Usually that starts off in the month of August and then continues through to the reversal month, which is October. And we're going to actually take a look at the charts today and see how the last few years have fared in relation to the September effect. Traditionally, what the September effect means is that if you were to sell your holdings, let's just say at some point in August, and then just to buy them back at some support level in October, that you would statistically improve your overall results for the entire year drastically, meaning that most market sell-offs have occurred in September. And the main two that we can all remember is, of course, in 2008, in the financial crisis, we had a very, very major market sell-off when Lehman Brothers failed and went under in the month of September, which caused a very, very drastic capitulation, which then followed through for a couple of months. But certainly also this is kind of a market memory for the Great Depression of 1929 also happened in September. So because of these various different massive market sell-offs in the past, many people have some market memory, and because most big drastic declines in the financial markets occurred in September, we call this the September effect, and therefore many people avoid the month of September. Now, there's a lot of reasons why this year might be different, and we're going to talk about some of those reasons, but we're also going to talk about some of the reasons why this year, may also, live up to the September effect. And of course, these various different news events or things that are pending and may not actually be in the news cycle just yet can, of course, start to affect the market. And generally speaking, technical analysis rules the day-to-day market action, but news will always, and the news cycle will always trump technical analysis. And what that means is that if some news event comes out, then certainly that can cause an effect on the markets. But if no news comes out, then just regular supply and demand rules the day-to-day managing of the markets. And so let's just jump in. So talking about news, we had some disappointing job numbers today. We had 235,000 new jobs added, while most analysts were expecting 720,000 new jobs. That is a fairly big disappointment from a jobs perspective. The economy was expecting a much greater increase in new jobs, and certainly that did have a little bit of effect on the market today. Now, let's jump right into the next item that was talked about a little bit today as well, was that this fall is set to be a record-breaking rush of IPOs. And IPO stands for Initial Public Offering. This year and last year really had a tremendous amount of IPOs. It was a very, very strong IPO market. Now, I want to just talk a little bit about what it means when a company takes their shares to the market. I know that, and certainly traders love to trade IPOs, but sometimes there's usually, if a market is very heated and you have a company that's pending an IPO, you would look forward to taking your shares and selling your shares to the public market. So if you're the owner of a company or a venture capitalist that invested in the company, you are actually selling some of your shares to the public. You are making an initial public offering. So it's actually insiders selling their shares to the public, raising capital for what they believe to be very good ideas and very possibly successful business opportunities. That could be looked at in two ways, right? That the market is very, very good and people want to take advantage of this, that people are very, very interested in the stock markets. Or it could be looked at as there are a lot of owners and entrepreneurs that are looking to sell or get rid of, reduce their equity stake by selling their shares to the public. So it could be looked at from one perspective in a bullish way, or it could be looked at in a very bearish way as venture capitalists and entrepreneurs look to offload and diversify their personal holdings by selling some of their company to the public. And they're going to be raising capital for those companies at a time when capital is pretty dear, meaning that people are interested in investing because the markets themselves are fairly dear, and dear meaning expensive. So just be aware that this year could be, the end of this year could be a record-breaking fall for new initial public offerings, meaning new companies selling their shares to the public in the open markets. So really, this should be an exciting trading season from a perspective of IPOs. And a lot of times, IPOs are very, very good for the financial industry, meaning they make a lot of profits for the financial industry, because the underwriters of these initial public offerings, they get the shares at a discount, right? They assist in the underwriting of the company, taking the company to the public markets. And then, of course, they also have usually some allocation that's held in inventory as part of being part of the selling group or whatever the whatever the deal is that put together that took the company public. It's very, very good for trading volumes. But sometimes, depending on where you are in the cycle, it can also be viewed like this might be a good time to liquidate your holdings and get the public involved, raise some capital potentially for some tougher times ahead. So there are kind of a duality. It's not always a good thing when you start to see a lot of entrepreneurs and venture capitalists cashing out at what could potentially be the top of the market. I'm going to go to the charts in just a few seconds. First, I want to make a very, very important announcement that we have yet again another number one best trader competition. Number one best trader competition announcement. Registration for our fall intermediate trading competition is now open and runs through October 3rd. The competition begins on October 4th, and it runs for 20 trading days till October 29th. Do not miss our early bird special. Sign up by Wednesday at 9 o'clock, 8 o'clock Central. 12 p.m. At 12 p.m. Eastern Standard Time. So that basically Wednesday on the 8th and 9th, I got you. And get $50 off. This is your number one best trader competition. It is our full registration. Sign up early and save. Visit One Best Trader, the number one besttrader.com for more information and to sign up. The prizes include up to 9 months of access of our DASTrader Pro platform for free. And the winner's name will be displayed on the NASDAQ market site in Times Square. Just jumping ahead, of course, everybody knows it's the Labor Day holiday. And, I want to just make a special note that the U.S. markets will be closed. I know we have a lot of traders all over the world trading and listening to this broadcast. So certainly the Labor Day holiday, that is a holiday in the United States of America. And it is a national holiday in the markets. Financial markets are closed. So the U.S. stock markets will be closed in observance of Labor Day. That is Monday, September 6th. DASTrader will be observing this day in our office. Our offices will be closed, and we will be open for our regular office hours on Tuesday. So just give me 1 second. I want to switch my my screens to my charts so we can go to the charts and talk a little bit about the history of September and what its effects are on the markets. So let me share my screen. So here we are on my DASTrader platform, and I'm going to just do one or two different things here. So this is my DASTrader platform, and the first thing I want to do is I'm just going to stretch this out, expand this a little bit, and I'm going to look at my charts. I'm going to add a couple of indicators. And one thing everybody always notices, and you could certainly find out how to do this if you decide to coach with me and work with me on an individual basis to learn more about your DASTrader. You just click here and you go to load settings. And if you notice, when you look here inside of my DAS, I have intraday with moving average pair, price bars by volume, intraday with pre and post market, intraday with simple moving averages, MACD, RSI, CCI, Bollinger Band, CCI, MACD, RSI, price bars by volume, VWAP, CCI, you name it. I kind of have it all right here. I have them all pre-configured. Now, the one that I want to bring up is I want to bring up, let's see, RSI, price by volume, moving averages. Let's see what this one looks like. Okay, boom. This has my MACD on it. This has my RSI on it, and it has my price bars by volume. Now, when looking at the markets, and I'm going to be using do some longer term analysis, I'm going to scrunch this down a little bit. Just need to have a little effect on that. And I want you to see, so we have a really, really long and mature uptrend here on the S&P. I'm going to go to the weekly chart, okay? And we're going to go back and we're going to look at the weekly chart of, let's just see, October and September of last year. And I want you just to look at this. I'm going to put a horizontal line on here as for last year. So this was last year. Let me just delete that, cancel. Delete. I'm not going to do a horizontal line. I want to do a vertical line. So let's just do September of last year. 928. Here it is, September of last year. All right, I'm just going to delete this one. Delete, cancel. You remove and remove. Instead, I hit duplicate. So here it is. This was last year, okay? September of last year, okay? I'm just going to make this line a little bit thicker. And I really want to show you the flexibility as well of DASTrader, how you can make your lines a little bit thicker or thinner. And let's just put on another line here. Okay, so this was on 9/21. So right here is the end of September. Okay, so this was September last year. Basically, you had 1 week down, 2 weeks down, 3 weeks down, right? And then you had 4 weeks down and you had a little bounce before the end of the month. And in October, we had yet another sell-off, right? So here is the second sell-off in October. So these, and by the end, let's just see what the date is here. This was on October 26th. So here is the start of November. So here, I mean, basically you can see that the two statistically worst months of last year, with the exception of the big massive sell-off, which started at the end of February and then continued into the middle of March, right before the stimulus package passed, was the month of September and October. And if you look at what we've done this entire year has been straight shot up as governments around the world, not just the United States government, have dumped in massive amounts of stimulus related to the pandemic and the fear around the pandemic. So the massive stimulus packages, and then of course you see the markets have gone straight shot up as the markets have kind of adjusted to that stimulus. Now, the only 2 months that were fairly down last year was September and October, and they really weren't down massively. They were just down compared to, obviously just there was only really one other down period, which was in June. And so that is a very good illustration of the September effect. Usually the selling, if you notice let's just go back and look at the daily real quick. Let's just go back to the daily. Okay, so let's look at the daily. Here are the days. I'm just going to go put on my crosshair tool. And if you go here, you can see here's 828. Here is 831. And then we have 9-1, 9-2. And then here you go. The next day, here's 9-3, 9-4. And then here is this is Labor Day right here. This is the Labor Day weekend. So we had a really big extended run up into Labor Day, and then the sell-off started, really right before Labor Day, and then kind of gapped down over Labor. Now, last year, the reason or rationale for that sell-off over the Labor Day weekend was that the market had run up really, really high, and that obviously people were worried about the extended Labor Day weekend and the spreading of the pandemic and the virus to and bringing on another wave, et cetera. And obviously bad news coming out over the weekend. And then that obviously kind of exacerbated things further. So traditionally, this is a period of time that the market tends to be a little bit extra turbulent. So certainly be cautious in September and October. And of course, we know that we've been in an extended period of time where the market has been up. It's been pretty much up since March of last year. That's going on now almost 19 months. Now, what are some of the things that we need to be mindful of? And I'm going to show you some things that we want to watch for. And I'm going to switch this back to a trend line again. Okay, so here is a trend line. And this is, there it goes. Just show this. So I'm going to be watching for a Trendline Break on the RSI, and I'm just going to hit OK. So here is my trend line. We have made a divergence, meaning there's a high. We are kind of into this overbought area. We have a high, a lower high, a lower high. Every time we get near the overbought area of 70 on the RSI, we tend to hit resistance. The market was up, although it seemed to be gapping up and then fading this week, which is also somewhat a little bit or slightly bearish. On the MACD, we are also still in a bullish upswing, but obviously that can change at any moment. Volume is incredibly low, which is normal for the end of summer. So here we are on the S&P, some divergence, negative divergence, meaning that price is going up, but the RSI is not going up with price. I'm just going to switch my charts real fast to the QQQ, which actually had an up day today. So here's the QQQ. We've had kind of this kind of gap up and then kind of island top formation on the QQQ. And we are hanging up here at the positive 70 area on the RSI. RSI means relative strength index, meaning that we are strong, but we are diverging, meaning that we are not quite going as high as we previously were, and that we are high and potentially going to not make a new high on the RSI. However, we have made a new high already on the price charts. So from the perspective of the NASDAQ and the S&P, we certainly have this negative divergence situation on the RSI and price. Next, we look at the Dow. The Dow does not have that strength at all. It is already making lower highs, although this one was a high. I mean, the Dow is kind of not in the deeply overbought area, which is actually in some ways more bullish. The big concern overall for the markets is inflation, and the Dow is a little bit more receptive or better. It holds up better in inflationary times. The NASDAQ tends to be a little bit more reliant. NASDAQ companies tend to be a little bit more reliant and therefore more reliant on credit, and therefore they tend to not do as well with when in inflationary times. But we'll see how the market digests this. Now, another thing to take a look at is USL. So want to talk a little bit about USL versus USO. So USL is the 12-month futures contract ETF. So it's an actually oil ETF that follows the 12-month futures contract, which is a little bit less price affected than the USO, which is what most people trade day trading wise. So USO is at 48.66. USL, which is better for holding, is currently at 25.24. But if you notice, the chart's a little bit less erratic and, kind of a little bit less volatile on the USL, but it's a good tracking stock for oil. And again, you're not seeing overbought on the USL or the USO for that matter. So that's that's somewhat positive for oil. It's not positive for us because if the prices of oil go up, then certainly we'll be paying more at the pump. But at the moment, oil does look like it's holding up fairly well. Another thing to keep an eye on going into this season is this is traditionally a time of year where there is a lot of natural demand going on in India. Okay, there is a festival season in India, which tends to also drive up prices of gold. And we can see that actually already happening in India. As you can see that we bottomed out on gold in August, and we are rising into September, October, which is the festival season in India. I think it's called, I'm not going to say it because I'll probably say it wrong, but needless to say, it's a festival season in India where they give a lot of gold and that creates some natural demand. There's other reasons why gold would be going up as well, meaning that there is inflation. Gold tends to be a good hedge or hideout for inflation. Then let's take a look at the weekly chart just to take a look. So you have a low, a higher low, and then yet another higher low. There was a little low here, but then we put in a lower low, and then this low is lower than these. And now we are in the possible area where we could break out above 171, and then we would blast off and go higher. Okay, so here we have it on gold. Pretty good looking chart on gold. If you do get a breakout, you would probably break out above the 180 level from a technical perspective, and I'm just going to draw what that looks like. So if you do get a breakout on gold, the next level up would be the 179, 180 level. So you have a very, very clear 10 points in here. And then on top of that, the next level up above that would be, you got the next prior high is way up there. So if the market did sell off in September and October, certainly gold, which is a hedge, has some room up to the upside as well. Another potential hedge is GBTC, okay, which has a kind of bullish engulfing bar here on the weekly on Bitcoin. So GBTC is the grayscale tracking stock. It tracks the price of Bitcoin, and certainly it looks like it potentially has room to run up into this area 47, from 40 to 47. And then, of course, it has places to run up even further if it gets to the next high. But it needs the first breakout over this bar, which is right here. So, and sometimes you'll see that Bitcoin, which trade 24/7, 7 days a week, 24 hours a day, very often Bitcoin and cryptocurrencies will break out over the holiday weekend. So certainly this is a holiday weekend. People aren't keeping their eye on, except traders probably are trading around the clock all the time, or at least algorithms are watching the markets all the time. So certainly we should keep an eye on Bitcoin. And that pretty much sums it up. I'm going to take a quick look at Exxon Mobil. So some of the Dow stocks are showing signs of weakness, like Exxon Mobil, which is kind of funny because oil is showing some signs of strength. It's currently below its moving averages. But just keep an eye on some of the component stocks as well. Let's take a look at Apple. Okay, Apple just had a recent breakout. So Apple broke out from 150 to 154. This was obviously, there's been all kinds of news on Apple as of late, but certainly Apple on a weekly chart looks like it's potentially breaking out higher, although it is extremely, extremely in the overbought area of the RSI. When you put it onto the daily chart, certainly it still looks pretty bullish, but could be at the top of its range, and it's not quite overbought on the daily chart. And you can go through and look at all the major component stocks. A stock like Apple makes up, not exactly sure, but it's something like 16% of the NASDAQ QQQ index. But certainly you take a look at something like Microsoft, which has a very similar chart to Apple, but on Microsoft you can see that there's really some real signs of divergence here on the RSI. And I'm going to go take one look. Let's take a look at AMD. AMD, kind of a little pullback into rising moving averages. We know that there's a worldwide semiconductor shortage. Some of the car manufacturers just cut back their manufacturing or put their manufacturing on hold until they get their orders of semiconductors in. So this is a story that's developing and that we certainly want to keep an eye on. All right, I'm going to jump back to my slides. Okay, so hopefully we can see, everybody can see the slides very clearly. And I'm going to just wrap it up for today and ask everybody to just give you a little bit of an update, relating to DAST. So stay up to date with all things DAST by signing up to our monthly newsletters and emails. Simply fill out the form on the bottom of the DASTrader website, www.DASTrader.com. Subscribe to our YouTube channel, our DASTrader TV channel as well, and certainly watch all of our DASTrader newsroom sessions. You can follow us on social media, LinkedIn, Twitter, Facebook, Instagram. Everybody have a wonderful Labor Day weekend, holiday weekend, and I'm looking forward to seeing you all in 2 weeks. Have a wonderful time with your family. Stay well, trade well. Bye-bye now.